So let's continue with part 3 of our intraday trading session. So the rule number 2 is stop loss. So please watch part 1 and part 2 as it's very much needed for continuity and your understanding. This is a very interesting quote which I saw somewhere and I thought it's very resonant to what we are trying to learn here. So it says, martial arts are the perfect lesson in how to do boring, repetitive things for future benefit. Perfecting a simple variant of a kick by practicing it 1 lakh times. So if you have to perfect a single kick or a specific kick, you have to keep on practicing day by day, thousands, hundreds, even lakhs of times. Same is with stock market. You have to keep learning, keep experiencing, keep believing in your setup and be very disciplined, and over time you will start perfecting the markets and start making good profits. It's all based on discipline. Options trading is also similar to learning any challenging skill. You need to follow trading rules and keep following, repeating them every single time, every single day, however boring they feel. So even stock trading is not easy. It's very challenging and difficult. But with time, your mind will become disciplined. You will start developing trading psychology. This is most important, to develop a trading psychology. What is this trading psychology all about? A time will come when you will start realizing that the stock market is going nowhere. It is present today, it will be present tomorrow, it will be present day after tomorrow. Stock market is like an ocean full of fishes which you can catch. You are the fisherman. But don't try to catch fish in troubled waters. So if you have worked on a trading setup and the setup doesn't work today, don't frustrate and don't make a bad move. Wait and watch patiently till your trade setup comes, else don't take a single trade today. Don't worry, come back tomorrow. Market is not going anywhere. This is the psychology you have to develop. Don't become jittery, don't become frustrated, and don't take a wrong trade. Because if you take a wrong trade, you will make loss and it is going to damage your psychology and confidence. Also remember, money saved in the stock market today is also money earned. So the rule number 2 is always set stop loss. Most important, as soon as you enter a trade, next immediate step without wasting a single second is to punch a exit or sell order with stop loss. You have to literally run and put this order without wasting a single second. Now the next question comes, how much stop loss to take? This depends on your risk appetite or your risk management, how much capital you have. But let me provide you with some guidance so that you can make an informed decision. First, understand option premium prices are influenced by option Greeks such as alpha, beta, gamma, delta, vega. But for short period of times, we are talking of intraday trade for few minutes or few hours, delta becomes important. So let's focus on delta. So what is the definition of delta? So delta is change in option price with 1 rupee change in the underlying stock price or index price in this case, if nothing else changes. For example, delta of 1500 per lot means if you bought one lot of options, you gain 1500 rupees when stock goes up by 1 rupee, or vice versa, you lose 1500 rupees when stock goes down by 1 rupee. For example, the option which you bought has delta of plus 0.6. The deltas of calls are positive values and the deltas of puts are negative values. So for example, here in this example we bought a option which has a delta of plus 0.6. It means that every 1 point increase in the index, the option premium is going to increase by 0.6. So for example, if the index changes by 10 points, the option premium changes by 6 points. So coming back to our trade and SL, if I took a trade, decide beforehand that if the trade goes against me, because that is a big probability, you have to have a very strong mind and disciplined mind. If market reverses, I will exit after, for example, 20 points in the index, because I have taken a trade based on my setup. Let's say it is a bullish setup, market is going up, my setup is triggered and I'm totally confident I have entered into a trade which is a call option. So now if market reverses, then there is something deeply wrong. I have to take an SL and exit. So 20 points in index, for example, bullish trend and setup signal is upwards. I bought call option when Nifty was 19,580. Now my SL will be 20 points. Let's say this is what is my risk capacity which I have decided. So this is the loss I will take if market reverses. Now when Nifty was 19,580, I bought a call which has delta of 0.6 and the call premium was 120. So Nifty 20 points will be 12 points in premium, which is basically 20 multiplied by delta, which is 0.6 is equal to 12. So I have to put a stop loss sell order with SL of 108. So my SL will be triggered at 108 and I will exit the trade and take the loss. After putting the sell order with SL of 108, I will sit back, relax, because now everything is in the hands of market. I have done what I can do and I'll just sit back and relax and watch the market and wait. Wait for the SL to execute, which is if market reverses, or wait for a profitable exit. If market goes against my trade, after 20 points fall in index, automatically the SL order will trigger, execute, and my trade will be closed and I will accept a loss of 600 rupees for a single lot. Please note, start your options journey, trading journey in intraday with one lot of Nifty 50 options. One lot today has 50 quantities. Now if market continues with the trend and you start making profit, so in the initial phase, book your profit at 1:1. This is not a recommended ratio, but to start with, take a small profit. So if you are ready to accept a SL of 12 points, so if you make 12 points profit, which means 600 rupees profit, because 12 into 50, one lot has 50 quantities, 600 rupees, book your profit trade. After you are profitable, which is going to make you feel happy, more confident, you have gained experience and confidence, and after some time you can start putting trailing stop losses after your 1:1 profit is achieved. Set your trailing SL at cost and keep trailing for much higher profits like 1:3. As this video will become long, I will release the further session as another video. Please continue and watch part 4. Thank you. Please like and subscribe to support my content. Thank you very much.